Hello, Theo traders. This is Gianni DePoce, and today is the 7th of May, 2024, and markets are making some really important moves from a technical standpoint. Last week, I sang a little bit more of a cautionary tune than I have compared to recent weeks because of the potential lower high that had formed. But by Friday, after the weaker than expected payroll reports, stocks surged higher in anticipation that the Fed may, in fact, actually be able to cut rates. Now, I'm not entirely convinced that's the case. I think right now what the Fed is hoping to do uh, behind the closed doors at the Eccles building, is nothing. But from a technical standpoint, we had a really significant development after that warning shot that was fired last week. If you recall, my stance was neutral. I said, hey, we completed what could be a higher low with respect to the trend in stocks, but with the potential of a lower high, some caution is advised. And I'm not really ready to get fully bullish again until stocks take out that high from the 29th of April. And that's what we did. We made new highs. We haven't made new all-time highs yet, but we did take out that high that had formed, which could have been lower one with respect to the trend. So this is looking better in the S&P 500. We are currently trading near the highs of the day. Of course, there's a few hours left in the trading day, and we never make full conclusions on the nature of the day until the market actually closes. But as we'll go through on some of these charts I'm going to share with you today, it's not all bad underneath the surface. So if you take a look at the NASDAQ, you'll see that it also is getting a nice bid. Compared to the S&P, it's not outperforming today, but with the Dow lagging a little bit behind, that is typically something you see in a market that is risk on. So I'm encouraged by that fact. Now, what I'm watching really closely in this market now, because we know that this has been a cause for turbulence as of late, is rising energy prices. I do think that crude oil is due for a bottom, and from a cyclical standpoint, it most definitely is. The only problem is that crude oil has not satisfied some of my downside price targets, but we are due for a low. And if crude oil starts to rally here and completes a bottom, what could that do for bonds? Well, bonds are trading in a really important resistance zone right now, not just the 30-year, but the 10-year note as well. And if another lower high is completed here in bonds, then I would be looking to see how stocks react, because this rally that we've seen in stocks over the last week or so has been off the back of, one, improving liquidity conditions as seen by credit spreads between investment grade corporate debt and treasuries, and two, an overall rally in bond markets. So if bonds start to sell off and if interest rates start to rise again, we're going to have to see whether this rally is real or not. Now, I am encouraged by some of the developments in the tech space. Of course, one of the big pieces of news as of late was Apple, after their earnings, announced a big share buyback, led to a massive rally higher. Now, I've been talking up Apple for quite a bit in recent weeks. I must admit, I did get stopped out on this stock, and it comes back to the old question in the trading community: do you want to be right or do you want to make money? I want to make money. That's why I'm here. That's why you're here. But I was right on this, even though I probably kept my stop loss a bit too tight. But overall, it still looks pretty good for the bullish case. If we zoom out and look at the weekly chart here, it looks like a higher low of significance was complete with respect to the longer term trend. And I still like the idea of Apple being a $250, $260 stock. Now, one stock in the Magnificent Seven that we've been all over, we actually started buying it back on the 7th of March, is Google. Google, we had an upside target at 175. That's our first place to take profits. It did have a nice response after earnings, came within about 29 cents of the upside target. So it looks like we might have that hit. So I'm watching that very closely in the coming weeks and days even, to see if we can capture some profits. Now, another stock that I've been watching very closely that I actually was able to add onto positions recently for a backup, the truck rating, believe it or not, is Cameco Corporation. So I've been long this stock since the 21st of March. We got in at close to the swing low, had a good risk reward set up, got long, and the trade's been working out, and we closed at a new high yesterday. So we've added to that position. I do need to see an overbought reading on the RSI indicator registered sooner rather than later, but I think the potential for much higher prices in this stock, the uranium play, it doesn't really matter to me what the catalyst is. I hope it's not geopolitically related. I'm more of the persuasion that it has to do with changes and advancements in energy technology, and I think there's going to be a lot of demand for Cameco going forward. A couple other stocks that I've had on my radar recently include Duolingo. This stock is looking good. I think is this a new all-time high? Yeah, hit a new all-time high yesterday, so that is looking very bullish. And as a rule, stocks that make new highs, new all-time highs especially, are bullish. Statistically, buying high and selling higher works out than trying to buy low and sell high. You can do that, believe it or not, but you're very rarely going to get the absolute low or the absolute high. But the good news is that there's a lot of meat in between the high and the low of a move for you to make a good living in this business. So I like what's going on in that space too. And then, of course, Oscar Health, a healthcare name, had a huge earnings beat today, more than doubled results above estimates. And so this stock, I think, is poised for greater gains as well. So that's what I'm seeing in terms of nice risk reward breakout plays right now. I want to talk about precious metals because, I've been a precious metal bull. Gold and silver kind of hanging out here. I think you just have to be patient. I still think there's a lot more value in silver than in gold right now. And when it comes to some of the names that we've been long, Anglo Ashanti, Agnico Eagle Mines, those continue to consolidate near the highs of their move, which is, as a rule, bullish price action. So in precious metals, I'm curious to see how they could react if interest rates start to rise again. Now, one of the biggest shifts at a macroeconomic level that we've seen with respect to correlations is that we've seen precious metals and mining stocks start to bid even with interest rates rising. That has not been the case in recent years, and to me is a very major development and signals that, hey, there's a big shift happening at a macro level. Precious metals don't care about rising rates anymore because there's the opportunity cost associated with owning metals. The only way to get income through metals is to own dividend paying mining stocks. And so if spot gold and spot silver are rallying even with interest rates rising, then that tells me that there's even greater demand for gold amidst this turbulent macro and geopolitical environment. I'm actually going to jump back over to the energy space real quick because, believe it or not, I actually took on a swing trade on natural gas on the long side. We took on this trade a couple weeks ago and have a stop loss and a close below 1406. Almost got stopped out about a week ago, but the low held or the stop held. And I think this is just a good risk reward setup. Cyclical factors pointing to a potential bottom. I'm not entirely convinced. It was a very small position I took on, but I like the idea of natural gas having a little bit of a technical bounce here. I'm not going to go as far and say that this is going to start a new bull trend, but for some alternative exposure for those that don't want to play natural gas, purely from a commodity standpoint, CNX Energy, a stock that I own right now, I really like. I have an upside target of $31 per share on this name. From a technical standpoint, I really appreciate how it's been consolidating into this cup and handle formation over the last, let's say, basically 2 years. And so as the saying goes, the bigger the base, the higher the space. It did initially break out above resistance of this technical formation, and it's consolidated in that zone as well. So, when former resistance becomes support and prices hold above there, that is a very good sign. And so I think CNX Resources will have much more upside in the coming weeks and months, assuming it doesn't slip back below former resistance turn support. So basically, anyone, 2150, 2250 zone is a good technical support zone. Have some slight modifications when it comes to stop losses for, risk reward purposes. But that pretty much takes care of everything that I wanted to review with you today. Thank you so much for watching this video, and I hope to see you in the Theo Trade chat room very shortly.